So we're kind of in this disinflation, deflation, inflation roller coaster where you need to constantly create credit, but then eventually you got to then stop the credit flow because inflation's running too hot, and then rinse repeat. It's a cycle. It's a cycle of stagflation. We think. Again, we don't know until we see the policy response. But what we're pretty confident in is that we're going to get slower GDP growth, risk off selling in risky assets, and a flight to safety like government bonds, the U.S. government bonds.
The signs are everywhere. Governments are spinning the same monetary wheels they've relied on for decades, but this time the engine is starting to fail. Traditional safe havens like bonds and gold aren't providing the certainty they once did, while a new player, Bitcoin, is slowly capturing the attention of institutions, sovereign funds, and even central planners. Some are calling this the beginning of a monetary transformation. Others believe it's the early stage of a reset that will kill gold and leave Bitcoin standing alone. Whatever the outcome, the shift is underway.
I completely agree. I think that's one thing that does play to Bitcoin's benefit is still to this date, like the way that Satoshi launched the protocol. Like he distributed a bunch of the supply in the early years at a point in time where you were essentially forced to self-custody. So as it stands today, I believe more than 50% of Bitcoin that is on the market is held in self-custody, but that number can always go up. But we don't have to belabor that point. I think another interesting sort of detail to point out here as it relates to what's happening in the gold markets, and if we are repatriating a lot of this gold, is Treasury Secretary Bessent, who historically has been really into gold and has gold as a core part of his portfolio, or at least when he was managing a portfolio before he became Treasury Secretary. And he's spoken openly over the last 18 months about this need for a monetary reset, a Bretton Woods 2.0 or a Plaza Accords type situation where everybody gets to the table and we agree that the fiat system has gotten out of control and we need to sort of come to a restructuring agreement of how the global monetary order operates, which is interesting.
The gold narrative has long served as a fallback whenever currencies get shaky. But now, even the stewards of traditional policy are floating ideas that resemble a complete overhaul, something akin to the original Bretton Woods or the Plaza Accords. This time, though, the conversation isn't about gold pegging or dollar dominance. It's about what comes next when confidence in fiat erodes and centralized systems no longer work. Bitcoin, with its decentralized architecture and fixed supply, is no longer just a fringe option. It's starting to look like the reset button.
Eventually, around 2050, after 2050, maybe it's 2055, Bitcoin becomes the unit of account. And what happens is I sort of put a price of about 85 million on Bitcoin based off of just monetary debasement, total global store value assets growing, Bitcoin only getting 20% of the global store value assets, which is like insanely conservative. But then there's the big jump when I believe everything will become repriced in Bitcoin.
Mark Moss's vision might sound radical at first, but he's not alone in thinking that Bitcoin will evolve far beyond its current role. As monetary debasement continues and global assets inflate, Bitcoin's value proposition strengthens, not just as a hedge, but as a measuring stick. The idea that Bitcoin becomes the unit of account by mid-century might seem far-fetched today, but every crisis, every currency failure, and every institutional buy-in pushes that possibility closer to reality.
This is something that this is what got me into Bitcoin. I'm a child of the great financial crisis. I was a senior in high school in 2008 when everything went to shit. Studied economics in college and really went to college with like a know your enemy mindset. Like, how could it get this messed up? And I think TARP and the bailouts really rubbed me the wrong way.
That early disillusionment with the financial system shaped a perspective that now sees disruption, not stability, as the path forward.
So I think right now, you we're in a situation where companies don't know what's going on. They're not spending money. They're not doing projects, and they're not hiring a lot. And so it definitely feels like to me that if you're Trump, would you rather this thing just crash out a little bit in the beginning and then build it back? I'd say that's possible.
Bitcoin wasn't born in a vacuum. It was a response to failure, a digital escape hatch from a system that bailed out the irresponsible and punished savers. As uncertainty rises again, Bitcoin's origin story becomes more relevant. While gold still gleams in vaults, it can't offer the same kind of optionality in an era where policy decisions are increasingly experimental, and technology is reshaping how people think about money.
Let's also bring on Bitcoin. Let's create a sovereign wealth fund. And so all of those things are starting to angle for that. Let's bring the assets in. Let's get the assets audited. Let's bring the value of those assets up. That's all part of it.
The conversation is shifting from secrecy to strategy. Auditing assets, revaluing reserves, and bringing Bitcoin onto the balance sheet all point toward a broader plan. In a world losing faith in paper promises, the next chapter may be built on verifiable value.
The U.S. government's got to renegotiate its debt, right? Trump has been, and Bessent had been very vocal to the point where I think Bessent finally said, okay, I'll stop talking about it. But they made as their point, right? I want rates lower. Well, why? Stimulate the economy, right? I feel like what they're actually doing with, let's say, axing capital flow within the government. The federal government is such a big part of our GDP, our economy, the movement, right? It's a little bit deflationary. Totally, it really is. And now tariff, I'd say the uncertainty, companies don't know if they need to hire or fire, right? It may impact your business in an amazing way. It may cripple it. So I think right now, we're in a situation where companies don't know what's going on. They're not spending money. They're not doing projects, and they're not hiring a lot. And so it definitely feels like to me that if you're Trump, would you rather this thing just crash out a little bit in the beginning and then build it back? I'd say that's possible.
Chaos as a strategy. It's not just possible, it's intentional. If the goal is to reset the table, then crashing the system first is part of the plan. And in that environment, Bitcoin doesn't just survive, it thrives. Its rules are transparent. Its issuance is known. It is the antidote to the kind of fiscal uncertainty that now defines not just America, but much of the world. So what did we just witness? A world staggering under the weight of its own debt, central banks oscillating between contradictory policies, and growing distrust in long-standing institutions. Gold, once the undisputed safe haven, now finds itself too slow and too opaque for the digital age. And rising from the margins, Bitcoin offers a new path, one rooted not in trust, but in code, transparency, and scarcity. It's not a question of if this reset will happen. The real question is which asset will define the era that follows. Now it's time to hear from you. Do you think Bitcoin will ultimately dethrone gold and become the world's true unit of value? Or is this vision still too far-fetched? Let's hear your take in the comments below. And as always, thanks for watching.